I'm a strong believer of the idea of Daniel Kahneman that whatever you don't see can refute everything that you have known so far. This could be in science, literature, arts, in trading as well, guys. My trading strategy has always been taking into consideration things that are completely unknown to us. I've been always trying to get in and out of trades almost with no certainty, give me the results that I want. Also, keep me away from trades that I don't want to take. I'm never taking anything for granted. Coming to short-term trades, long-term trades, doesn't really matter. For me, the one and only thing that has always been certain is the fact that nothing is certain. And then taking advantage of that is so powerful. If you think about it for a second, if you knew that things won't go according to your plan, you will try to think of other things, like try to think of B plan that could help you to navigate through turbulent times. If on the other hand, you're always certain that things will go in your direction, trying to find the bias in the markets, you're trying to trend the trend line and where other trends begin. So there is no way we can know in advance if your next trade will be in accordance with the trend. That's why I always try to come out of the idea that you have literally no idea of what the future holds. The only thing that you can do is for a small fraction of time, possibly position yourselves in trades that give you some sort of an advantage. This last trade was somehow a profitable trade. It was a double-digit trade. So let's go over it and see what I have been doing in order to get into this trade. Invest in preparedness, not in prediction. These are the words of Nassim Taleb, and I couldn't agree more with his words. And this couldn't be truer in the world of trading, where prediction usually doesn't lead you to anything good, to be quite frank. And if you're prepared, if you have your plan in front of you, and then you just act on it when you see the markets aligning in the direction that you were either expecting them or not expecting them to align themselves. Usually, our good traders usually should have at least two, if not three or four different scenarios when they're preparing for taking a trade. Doesn't matter if this is a long or a short trade. What I'm trying to say here is that before the markets open, you should always be prepared and know what to expect and try not to do any predictions. In my case, this is looking at the major zones that I'm looking at from the higher time frames, then narrowing down to the lower time, the medium-term time frames, and then going down all the way to the 1 minute chart from where I can take trades, minimize my risk, and then potentially maximize the outcome that I'm getting on those trades. So, for instance, this is exactly what I did this morning. And consider the fact this is Monday. Mondays are usually very quiet days. I was definitely not prepared to take a trade which would bring me over 1 to 10 risk-reward ratio. But this is exactly what happened, guys. So these were my zones, following a few instruments. Then when the price went into the place where I was expecting it to go, I took a long trade on DAX. Then I entered in a risk-free trade literally after a couple of minutes. And moving forwards, the price went down to retest my entry. It almost went to stop me out. It was very close, less than a point, I would say, and the price reversed. That's why another important thing is to never move your stop loss too early. I think I've said this in other videos, but I can't emphasize this enough to especially new traders. Then the price literally shoot it up and it went to this level, which basically was 1 to almost 14 risk reward ratio. I closed this trade here. It's 1 to 13.60 something. This is where I closed the trade. So again, a couple of takeaways from this video, guys. This will be: first, you need to start your day prepared. So you need to have a trading plan. Then the second most important thing is you need to have some sort of a time framework that you abide to. So you basically know that every day you're showing up at more or less the same time. You have your plan, you're working for, I don't know, maybe 30 minutes, 1 hour. The lower the time that you're spending in front of the screens, but the more concentrated efforts you're putting inside of this time, the better the results. And this is exactly what I'm following in my day trading strategy. So we're starting with a trading plan. This is what we've seen. I've already laid out all of the zones that I'm looking for before taking a trade. Step number 2 is, first, I was already in this time frame that I'm only looking at the markets, which is the market open, the first 15 to 30 minutes. The next step was I took a trade and I followed my risk management rules. Then again, I followed time in order to find a better exit of my trades, and then I closed my trade. So these were the 5 steps I followed for this particular trade. In all honesty, the steps are not much different from one trade to another. The only difference is that the market environment changes. We are not living in a world that nothing changes. As I started the video, the risk is the only, or uncertainty is the only certain thing that anyone in any field is going through, especially in trading. So I would say one of the most important takeaways of this video should not be simply the double-digit trade. I mean, these type of trades, they come and go. What stays with you and what should stay with you is the consistency and building the rudimentary skills in order to achieve your consistent targets. See you in the next video, guys. Bye.